Welcome to the Nevada Department of Taxation's Introduction to Commerce Tax Training. The information in this video is provided as of June 29, 2016. In this module, we will discuss the deductions available for commerce tax. It is important to remember that these deductions are not cost of goods sold or ordinary and necessary business expenses, but rather amounts of gross revenue that are not subject to commerce tax. We will discuss the general business deductions, pass-through revenue, which is a deduction that is specifically defined in the commerce tax law, and the industry-specific deductions. Deductions for commerce tax can be divided into two broad categories: general business deductions and industry-specific deductions. Commerce tax is a tax on the gross revenue that a business entity generates from engaging in business in Nevada. Only the deductions that are specifically stated in the commerce tax law are allowed. Certain deductions are taken as an adjustment to gross revenue before being reported on the return. Please review page 2 of the instructions for those items. You may also wish to review our video on gross revenue for further information. Deductions for commerce tax are allowed only to the extent that they are included in gross revenue. This is a snapshot of the commerce tax return showing the lines used to report general business deductions. Remember that the amount of the deduction has to be included in gross revenue on the return before the deduction is available. General business deductions include returns and refunds to customers, bad debt. This deduction conforms to Internal Revenue Code 166, so bad debt that would be deductible for federal income tax purposes would also be deductible for commerce tax. Pass-through revenue. This deduction is specifically defined for commerce tax, and we will discuss it in more detail shortly. Interest income is deductible except for interest income on credit sales. A credit sale is defined as a sale of goods for which a payment is accepted at a later time. Stated another way, interest income on credit sales would be taxable for commerce tax. That interest is reported in the income section of the return. Tax basis of securities and loans sold by a business. This deduction is available when the securities and loans are considered inventory in the hands of a broker-dealer. The deduction for pass-through revenue is specifically defined for commerce tax. Revenue required by law or fiduciary duty to be distributed to another person or government entity is deductible. An example would be a trustee distributing funds to a beneficiary. Also, revenue that is mandated by contract or subcontract be distributed to another. And these are the three items that qualify as deductible. Sales commissions require to be reported on a federal 1099 miscellaneous. So not every 1099 miscellaneous that your business issues is going to be deductible. Has to be sales commissions here. Also, the tax basis of underwritten securities and subcontracting payments for construction or improvement to real property. Not every subcontracting payment is deductible. It'll have to be in connection with real property. More items that are deductible as pass-through revenue are taxes collected from a third party and remitted to a taxing authority. The example here is sales tax. But remember that deductions for commerce tax must be included in gross revenue in order to be deductible. So a cash basis taxpayer that includes sales tax in gross revenue would receive that deduction. If the sales tax is not included in gross revenue, no deduction is available. Revenue received by business entities providing legal services that is required to be distributed to a claimant. The example here is damages, or a reimbursement of an expense of a claimant, such as a bail bond. Revenue received by one member of an affiliated group from another member. The example we provide is intercompany transactions. For commerce tax, an affiliated group is a group of two or more businesses that are commonly owned or controlled either directly or indirectly by 50% or more. Since the revenue between affiliates is 100% deductible, this amount does not need to be reported on the commerce tax return. For a more detailed definition, please refer to the commerce tax law for the statutory definition of pass-through revenue. To illustrate pass-through revenue, we have for sale real estate. They generated $12 million in gross commission revenue from selling homes in Nevada. For Sale uses independent contractors as real estate agents and a cleaning service. For the tax year, For Sale made the following payments. They had advertising expense, real estate commissions reported on a 1099 miscellaneous, cleaning services also reported on the 1099 miscellaneous. A pass-through deduction is available for sales commissions reported on a 1099 miscellaneous, so For Sale will deduct the $6.6 million of real estate commissions. The cleaning service, even though it's reported on a 1099 miscellaneous, is not a sales commission, and the advertising is a business expense, so the other two items are not deductible. Moving on to the industry-specific deductions. Employee leasing companies can deduct wages, payroll taxes on wages, employee and workers' compensation benefits received from client companies for leased employees. The gaming industry can deduct the gross receipts used to determine the Nevada monthly gaming license fee. Healthcare providers can deduct the cost of uncompensated care, amounts received from Medicaid, Medicare, Children's Health Insurance Program, Fund for Hospital Care to Indigent Persons, TRICARE, and workers' compensation services. Healthcare institutions are only allowed to deduct 50% of the above amounts. Insurance companies in Nevada pay a premium tax and can deduct the net direct premiums reported for that tax. Also deductible are certain life insurance and annuity contracts, payments received pursuant to the Social Security Act, net direct premiums reported for the Nevada captive insurance premium tax, and premiums reported for the Nevada tax on surplus lines. The insurance deduction is available on line 22. The mining industry can deduct the amount of gross proceeds used to determine the mining tax. Liquor importer wholesalers pay a liquor excise tax in Nevada and can deduct the amount of tax paid. Also deductible is revenue from the operation of a facility that houses members of the U.S. Armed Forces and is located on federally owned or leased property. Thank you for watching the Commerce Tax Deductions module. Please review our other videos for further information. Thank you.